The $25 million video call that wasn't real. What would you do if your CFO appeared on your screen, urgently requesting a confidential financial transfer? For one Arup employee in Hong Kong, the answer seemed obvious. Follow protocol and execute the transaction. After all, they could see their CFO's face, hear their voice, and recognize their mannerisms. Except it wasn't really their CFO at all. In what has now become a landmark case in cybersecurity history, this Arup finance team member was deceived by what experts are calling one of the most sophisticated deepfake scams ever executed. The result? A staggering $200 million was transferred directly into criminals' accounts, all without a single system being hacked. Are you absolutely certain you wouldn't fall for the same trick? The new face of corporate fraud, understanding the threat. Before diving into the mechanics of this extraordinary heist, let's establish what makes this case so profoundly different from traditional cybercrime. A traditional cyber attack targets technological vulnerabilities, requires system breach, can often be detected by security software, and usually leaves digital evidence. However, deepfake fraud exploits human trust and psychology, bypasses security systems entirely, difficult to detect with current security tools, and creates legitimate-appearing transaction records. This distinction is crucial because it represents a fundamental shift in how we must think about security. The Arup case demonstrates that in our digital-first business world, the weakest link isn't always your firewall, it's human perception itself. How the deepfake scam unfolded. Setting the stage, the initial contact. The operation began with deceptive simplicity. A phishing email appearing to come from Arup's UK-based chief financial officer landed in a Hong Kong employee's inbox. The message requested a confidential transaction. A common enough occurrence in a multinational firm handling large-scale engineering projects worldwide. What made this different from typical phishing attempts was what came next. The video call that wasn't real. The unsuspecting employee was invited to a video conference where they encountered what appeared to be multiple senior Arup executives. The faces were familiar, the voices matched, the mannerisms were consistent with previous interactions. But everyone on that call, except for the victim, was an AI-generated simulation created using publicly available footage of Arup employees. Think about that for a moment. How often do you trust someone because you can see and hear them? In business environments where video calls have become routine, our natural tendency to trust our senses creates a perfect vulnerability. The transfer from skepticism to compliance. During these calls, the employee was instructed to transfer $200 million across 15 different transactions to 5 Hong Kong bank accounts. Initially skeptical, as any good finance professional would be, the employee's concerns were systematically addressed by the executives on the call. The psychological manipulation was masterful. The familiar faces, voices, and corporate context all worked together to override the employee's instinctual caution. It was only after completing the transfers and consulting with Arup's actual headquarters that the devastating truth emerged. Breaking the trust barrier. Why this attack succeeded. The Arup deepfake scam worked because it exploited 3 fundamental human vulnerabilities. First, the visual and auditory trust signals. We're biologically programmed to trust what we see and hear, especially when it matches our expectations. Second, authority compliance. The natural tendency to comply with requests from senior leadership, particularly in hierarchical corporate structures. And the third one, Contextual plausibility. The request itself wasn't outlandish in the context of a global engineering firm that regularly moves large sums across international borders. What makes this case particularly alarming isn't just the amount stolen, but how it redefines what constitutes secure communication. If we can no longer trust video confirmation, what verification methods remain reliable? Beyond Arup, the widening implications. The ripple effects from this case extend far beyond a single company's financial loss. For businesses, the incident serves as a stark wake-up call that traditional security measures, even when perfectly implemented, are insufficient against deepfake threats. Organizations worldwide are now reassessing their transaction verification procedures, with many implementing multi-person authorization requirements and out-of-band verification steps. For technology, the case has accelerated development in deepfake detection technology and liveness verification systems that can distinguish between real humans and AI-generated content. For regulatory bodies, financial regulators globally are now scrambling to establish new guidelines for large financial transfers, with some proposing mandatory in-person verification for transactions above certain thresholds. Practical steps to be able to protect yourself and your organization. While the threat is sophisticated, there are concrete measures you can implement immediately. Organizations can start with: implement multi-channel verification. Require confirmation through separate communication channels, for example, with a follow-up phone call to a known number for significant transactions. Establish authentication codes. Create periodically changing verification phrases or questions that only real team members would know. Institute mandatory waiting periods. For large transfers, build in a deliberate delay to allow for additional verification steps. Train employees on deepfake awareness. Regular training sessions that demonstrate current deepfake capabilities can help staff remain vigilant. For individuals, we have similar-like checks. Trust, but verify. When receiving unusual requests, even from familiar sources, verify through alternative channels. Be suspicious of urgency. Scammers often create artificial time pressure to prevent thorough verification. Look for subtle inconsistencies. Current deepfakes still have limitations, particularly with environmental elements like lighting or background details. An evolving challenge: what comes next? As we move forward, the arms race between security professionals and AI-equipped criminals will only intensify. Experts anticipate more sophisticated implementations. Future attacks will likely combine deepfakes with other social engineering techniques to create even more convincing scenarios. Democratization of the technology. As deepfake technology becomes more accessible, we'll likely see smaller-scale attacks targeting individuals and small businesses. New authentication paradigms. Biometric security, combined with proof-of-presence systems, may become standard for significant financial transactions. We need to start living with a new reality, learning to navigate a post-trust world. The most profound lesson from the Arup case isn't technical, it's philosophical. We're entering an era where seeing and hearing can no longer be automatically trusted. This fundamental shift requires not just new technologies, but new mindsets. Organizations that recognize this shift and adapt accordingly will be better positioned to protect themselves. Those that cling to outdated security paradigms based solely on technological barriers remain vulnerable. The Arup incident wasn't just another cyber attack. It was a harbinger of a new reality, one where the line between the real and the synthetic continues to blur. The question isn't whether your organization will face similar threats, but whether you'll be prepared when it happens. Are you ready for a world where seeing is no longer believing? Do start taking action today. Don't wait for a $25 million wake-up call. Start conversations within your organization about deepfake threats and review your verification procedures for financial transactions. The time to implement enhanced protections isn't after an attack, it's now. Remember, in the age of AI, skepticism isn't paranoia. It's prudence. That was it for this episode. Hope you liked the content. Hit subscribe, tap that notification bell, and leave a comment below telling us which financial crime case you want us to break down next. Because remember, in the world of financial crime, what you don't know can hurt you. Stay safe, stay informed, and we'll see you in the next video.